Okay, so very good morning or afternoon, everyone who found the time to join us today for our second event of Qorus and CVA mobility community. We are very excited actually to host all of you. I think we'll be still waiting for a couple of participants to join in the upcoming couple of minutes. So please don't be interrupted, with the noise that new participants are joining, because we have actually changed the platform to Teams to have it more comfortable and seamless for anyone to be with us. So we have for our second session today prepared a really exciting topic, from owning vehicles to using vehicles, and what type of financial needs, growth, and expectations do we see around this area. So let's go straight to the point, without any further ado. My name is Lucas. I lead communities at Qorus. So I'm right now, let's say, a partial as well community leader in mobility until we have the right engagement of a couple of the other experts. In the meantime, we are very proud actually to work with CVA, with whom actually we introduced the whole partnership and the whole community, which is dedicated especially for people working around mobility topic, whether it is financial services executives, whether it is fintechs, leasing companies, rental car companies. This is the first community ever in Qorus that we are expanding beyond financial services industry, because many of you might know Qorus in the past as EFMA. Yeah, we used to be in the old days, called European Financial Marketing Management Association. That was, I think, in 2010. Since then, a lot has changed. We are a global association right now called Qorus. We have rebranded last year, but we still feel the same purpose, trying to connect and create opportunities for executives in financial services industry to move and help each other with the whole industry. So as I mentioned already, with CVA, we work closely on mobility community, but why Qorus communities in general and why it has been established? In the past, many organizations were, physical driven, as EFMA and Qorus was. We used to do, 30, 40 conferences a year in 2007, I remember. But since then, a lot has changed. In 2019, we decided to launch our first community on SME banking for SME bankers and people working in business banking area. And within 3 years, as you see for yourself, we have expanded its 6 dedicated communities, and each of the community is serving different segment, different part of retail banking, or even new exciting topics. So mobility is among those ones, and we are really excited to already have a couple of the other in mind, as for example, gig economy, that might be a new one to introduce. The good news is that all the members of communities can be members of multiple communities, not only one. So if any of other topics attracts you quite a lot apart from mobility, more than happy to welcome you, in sustainability topic, open finance, insurance, SME, or digital reinvention. All of them are open to Qorus members. For all those that are not members, we still give a space and opportunity to be there from the very beginning, and step by step to see and evaluate as well the value that might come with the membership for you. Good. So without any further ado, let's go straight to the introduction to today's topic. I'm not the expert, but we are happy to work, as I mentioned, with our partners from CVA. And this time, I would like to kindly ask Emilia to introduce a bit from her perspective, a senior manager auto mobility platform at CVA based in the UK, her view, her experience, and probably some of the best practices they see in the market based on their work they do with the clients. So Emilia, over to you.
Sure. Yeah, sure. So I think as Lucas started, so I think the thing about this topic is it's a topic that is not a new topic. So in the mobility industry, the notion of moving from owning vehicles to using vehicles is something that we've all been talking about already for several years, in very small volumes, then becoming more mainstream discussion. I think what we say, and that's a little bit what's on the first slide, if we go to it, the reason that this topic is so interesting now, and why we actually see material changes in the development of this area, is because there are a number of different factors that are now actually working together to drive take up on something which has been already a topic for quite a long time. So you see here we kind of... I think we have someone who needs to mute But
yeah, we are happy actually to have all of you on the camera, but please, if you can mute yourself during the speeches, that would be fantastic. Thank you.
Okay, great. So in terms of what is driving usership to be a relevant trend now, I think we say it's split into kind of three buckets. So there's the ecosystem side, the offer side, and the demand side, which are all working in that direction, and which now mean that the take up in Europe is becoming more significant. So on the ecosystem side, in the kind of most fundamental level, is the transition towards EVs, and you see in the actual volumes of sales which have been done in the particular G5 markets in the past few years, a really material difference in the share of usership when it comes to EV sales, for a variety of reasons. Some customer driven in terms of higher ticket size, higher uncertainty, some industry driven in terms of more of an ambition to keep control of those assets and use them through life cycles and use them beyond kind of their pure functional new car sale purpose. So that is kind of underlying the drive that we see going forwards now. On the offer side, a combination of factors are starting to make usership make more sense. So I think we all have seen OEMs and banks and different players trying to do subscription 5 or 6 years ago in a very new car focused, very expensive, very premium way that didn't really match to the mainstream market. There's been a kind of resurgence of subscription approaches which take into account the value of assets beyond their first life cycle, using multi-product fleets, also managing products across different types, so short-term rental, subscription, and leasing all together, which mean that it's starting to make sense from an offer perspective towards the customer. That's also linked to the fact that players are more interested in focusing on the full value of the asset, which means that they can make those products work for the customer. And then also just the impact of new players coming into the market who are not constrained by the business of the past, particularly some of the Chinese OEMs coming into Europe who really come in with a usership first focus, because again, they have reasons they need to keep control of the asset, but which help to tap into offers that meet those customer demands. And then on the demand side, I think time always has a value in terms of new opportunities. So familiarity with new mobility is very much becoming more mainstream. And there are also visible brands that make that more present to the customer. So for example, Sixt, Kinto as well in Europe. And then also to some extent partially benefited by impact of COVID and the inability to do in-person sales, the acceptance levels in terms of online and direct purchase have increased significantly for customers, which obviously then has a positive effect on being able to do more flexible and more varied usership products in a seamless way, which again makes sense to the customer from an offer perspective. So with all of that being said, those factors mean that if we go on to the next slide, we do expect to see, in terms of the share of usership in Europe, a significant increase going forwards. So nobody has a crystal ball. Can't say for sure that these numbers are perfectly right, but what we do see in terms of the progression is the share of usership contracts, so anything operating lease, subscription, and rental, in 2015 was about 28% of the market. By 2021 in Europe, it was about 38% of the market, which was also slowed down because of external factors around supply and so on. And the forecast that we have based on the findings that we have modeled out is that by 2030, we're talking about an ownership share of around 60%. And as you see in the little boxes, which not to go into detail, but the big difference as well is obviously that usership in corporate has been well established for a long time with operating lease. And the expectation is now that share of usership is going to increase significantly in the consumer space as well, which means that for players in the market, this is not a trend which is limited to one customer segment, but it is one which is expected to be fundamental across the market. So what does that mean if we kind of look at it on the next slide? So obviously we're going to hear from our speakers what exactly that means for them and what they've been doing and how they take that into account in their plans going forwards. But for the industry more broadly, what it means is that overall there's more of a functional nature towards assets and how to fund those assets, how to finance those assets, how to access those assets, how to use those assets, which means that the relationship towards the customer is a bit more transactional. That value chain is much less deterministic. So players need to be able to go beyond just financing an asset or just managing the services of an asset or just managing a new car, and need to really decide where in the life cycle do they have synergies and capabilities to create products that make sense to the market. The flexibility and the granularity obviously increases as you go into smaller life cycles. You don't have 3 years until you have to think about the car again. Individually differentiating becomes a lot more about things like revenue management, flexible pricing, being able to offer towards the customer in a way that you can make sure the assets match the customer, the pricing matches the customer based on relatively local demand. And all of that also means that in general, there's a more all-out approach towards the industry. So where players used to have one very clear position on a product or a customer segment, that clear line is not so clear anymore, with lots of different players competing on quite a similar battlefield in terms of OEMs, leasing companies, rental companies, also banks, where they get more and more into head-on competition, that they're not just all delivering single components of the value chain. So that's a little bit of whistle stop. Why do we think usership is an important topic around mobility and around all different components of the value chain? Before we get into our first speakers, I think we wanted to just do a quick question in terms of view in the room, shall we say, of where you think the value of or the impact of usership is likely to be going forwards. So I think Mirka or Lukasz is going to pull up a little poll for us to respond to.
Indeed. Thank you so much, Amelia, for the introduction. So right now, in front of your screen, we have prepared for you a short poll just to engage you as all our valued participants. So please have a look at the first question that should appear directly on your screen and cast your vote. If you cannot see it, as a part of your Teams application, you can go to slido.com, and there, I think with the name Mobility, you should be able to find exactly today's event and just cast a vote. So Mirka is about to share that as well, so we can very easily access. But I see that already we have 8, 10 votes that are 11, that are coming in. So let's give it 1 minute before we evaluate obviously the results. In the meantime, just to as well mention after this poll and after mentioning a couple of the results and Amelia's inputs to that, we'll go straight to the 3 speakers that we have kindly prepared their case studies or overview about what they do in their institution. So please feel free to send us your questions in the Q&A section, or if you want, even to jump on and have a discussion, feel free to raise a hand. We are more than happy to have this session interactive and discuss the topic more in details. So I see that we have 16 responses at the moment. Let's give it 1 or 2 additional minutes just to finalize, and then I guess we will have the majority at least to have a feeling about the first question. I'll just read it loudly, for everyone that probably haven't accessed. So will usership, operating lease, subscription, rental impact your business in terms of new products or shift of volumes? And you should mark what could be the impact from 1, which means from 1 star, which means no impact, all the way to 10, which might mean a significant impact. Okay, I guess we are good to go. I see the majority of the people already responded. So Amelia, handing back over to you, and Mirka will share and show the results, what we get on the first question.
So I think I can't see it, but I think what I saw was 7.7 was the result that we had roughly after the polling, which I guess is not surprising. So I think in general, it is a topic that everyone is aware has a development potential. I guess one of the questions is how quickly, and I guess that we'll also hear from our speakers coming up. And I guess we'll see if we change our view in terms of that. But
panjang, but the simplified version is that anak I ada ADHD.
Okay, so Mirka should be sharing right now the results.
Okay.
Sorry, it took some time.
No, that's fine. Yeah, so I think we have most people on the right hand of the scoring, which I guess is not a surprise. I am quite curious who thinks it has zero impact. So that will be, I guess, quite interesting to know which part of the industry thinks that maybe it's not so material to their development. But I guess most people are to the right as expected, and I guess we'll see a little bit now with our speakers how they find that it's materially impacting how they develop their solutions going forwards from slightly different angles.
Good. So we have one more question prepared. Do we go for it right now, or do we keep it for the after the first speaker? What do you think, Amelia?
Let's do the first speaker probably, and then we do the other one.
Yeah, I think so. Wonderful. So let's go straight to our first speaker today. So it's Stefan Rabi coming from Allianz in Germany, I guess, or in France, Allianz Partners. I'm right now not sure, Stefan, whether you're based in Germany or France, but I guess, you'll give us a bit more, introduction and insights on that. So Allianz Partners right now, for many of you might not know, but since, Qorus is a global association of banks and insurance companies, we always have a different chairman, and the board of Qorus consists of different, bankers and insurers. And for the past 3 years, we had the pleasure to have Jean-Marc Palliol, who is representing Allianz Partners and who is exactly, the colleague of Stefan heading our board. So we try to be more insurance-focused, insurance-oriented, and try to, feel as well the needs of our members. And I hope that as well having Stefan for today's event might bring you a bit more, insights on how we are trying to give space and insights and opportunities to our members to present some of their best practices. Last comment to mention, Allianz was last week or 2 weeks ago actually awarded as the Silver Award winner in the Global Innovator Awards, which we were hosting in Milan among all insurance companies across the world. So congrats to that once again, and let's have a look at the case study. Stefan, over to you.
Yeah, thank you, Lucas, and good morning, everyone from Munich, not from France, from Allianz Partners, indeed. And thank you to Qorus and for Corporate Value Associates for having me. I hope you can see the screen. It should show a dark cloud and read a perfect storm. And of course, before I start, I should extend my welcome also from Jean-Marc Palliol, who is today with one of our entities actually in Paris. So what I want to do is actually talk to you about 15 minutes or so about what I would call the perfect storm, which is basically a presentation looking at coming from what I would see as a digital revolution into mobility, and then to the topic of owning versus using, something that was touched upon just a few seconds ago, and I'm happy to be able to second what has been said already, but I will come to that in a second. So I will give you a short intro in terms of how we see the digital revolution and how this is then basically venturing into opportunities. I brought 2 example solutions, businesses we have currently running and what we have learned there. And then, of course, some food for thought for the end of the presentation, and maybe also a call to action for those who are, in the driver's seat here and can make changes happen at their company. Again, this is more an insurer's view on it. Myself, I've been working some time for car manufacturers in the last 13 years here at Allianz. So it's also, of course, carrying a bit of this, my being a hybrid and having some petrol in my blood, apart from petrol not being the fuel of the future for mobility. Of course, I come to that in a second as well. So when we talk about the digital revolution, we really talk about something that probably started in the end of the 20th century. But the digital revolution for us marked, or generally speaking, marked the beginning of what we call now the information age. And with the information age, we in this age now, we really, the customer is much better informed and is much, let's say, much more expecting his needs to be met, because he can basically compare, he can basically have access to all sorts of information with a click away. So this is really something that if you look at it, has an impact on our industry, on all of our industries, and it really depends how you define or how you sort of what takeaways you take for your own business and products and solutions. But I want to go roughly through a couple of trends that we see that we find especially important in our business. So there's this trend from local to global. So when you work with B partners today, their decisions are more and more global. So we're talking about global agreements that we are closing, and I will come to a couple in my examples later on the case studies, but with local implementation. So this has very much an impact on how you deal with your customers. So depending on how you're set up in terms of account management and the expertise of these people that you have, but also how your organization and your governance is looking like. So it's what has been something that is multi-local has become really a global business, a business that is done on a global level with big partners like Amazon, etc., but needs to be executed locally, because especially in the insurance industry we have local regulation. The second one is from physical to digital, and there's probably you can describe that from a customer perspective, and we're talking about an end customer here with 5 criteria that need to be met. So it's simple, it's fast, it's transparent, lean, and user-friendly. This is what you have to offer today in order to be relevant. If you are not, you're out. If you look, and this is maybe not the topic of today, but if you look on your employees, we see a trend from careers to missions. So nobody is joining a company to have a career. People want to have a mission. And here again, you need to think about what sort of missions you offer to your new employees, because they have choice and they are able to work from everywhere for everybody. So the question really is, do you have the right missions in place to attract the talent you need in order to conquer the opportunities that are out there? Again, an issue, a topic that is not so important for the discussion today, but important for Allianz Partners, as we are one of the biggest international health providers, is the notion from treatment to prevention. People don't want to make sure they of course need to have the security that if they are ill, they get the right treatment, but they don't want to get ill. So the question is here, how can you help with solutions, with services to help your customers not to become ill, rather than helping them when they are ill? So it's a completely different also interaction you are having with customers going forward. And now moving to mobility, and it was mentioned already, from thermic to electric, so combustion engines versus electric vehicle or hybrid vehicles. We've recently done a study at Allianz Partners, maybe you have seen it, with our customer lab, looking globally at the main car markets. And if you look at the demand of customers, then you can basically see that 60% of all private drivers consider their next car to be electric. And if you look at the age group between 25 and 40, then you're already at 75%. However, of course, on this long road to decarbonization of the entire fleet, we are still some time away, which is, of course, an issue for car manufacturers that are investing at the same time in thermic and electric vehicles. But at the end of the day, it's something that has started and that will go on. And depending how fast, it depends a bit how fast this will go. It depends a bit on also on, of course, the policymakers and the legislation about, it depends a bit on the charging infrastructure, in terms of legislation, you see at least in Europe, but also Biden has just signed an act in the US that basically by 2030, 2035, There will be the ban of new vehicles sold as combustion engine vehicles. You will have to reduce emissions. The EU said by 55% by 2030, and this can only happen if, of course, we go from combustion to electric vehicles. And if you look at it more broadly, then the research tells us that by 2030. That's what Ernst & Young has looked at. 55% of all vehicles sold will be electric. And this is basically calling for a need of 110 to roughly 180 billion US dollars that is needed to satisfy this demand, both on the side of charging infrastructure, but also in the terms of in terms of producing those cars. Now, Allianz has very early started to look at electric vehicles, electric engineering. We have been engaged in the Formula E racing when nobody really looked at it. This is gaining more and more traction because it's introducing this technology to the wider mass, and where you had a certain anxiety in the past from customers that were range anxiety, etc. You can see nowadays that people, as I said earlier, 60% decide to buy an electric vehicle as their next vehicle. Now, if they buy it or not, we will see in a second, but at least they want to use it. Yeah, and if you see, and this was mentioned already before, that the Chinese car manufacturers venturing into Europe nowadays with only electric vehicles and taking MG as at the forefront, for instance, you can see how this is picking up, and they have been selling 130,000 cars this year in Europe, and I don't know their plans, but they will be very ambitious. So you can see this train has left the station, and we are now moving fully electric, like it or not. Then, of course, if you look at the trend from vehicle to mobility, then it's actually again looking a bit at, I don't get access to a specific vehicle, but it's again looking at a solution that is simple, that is fast, transparent, lean, and user-friendly at the end of the day. So it's about getting the whole package for your vehicle, for your mobility. It's not just the car, and then you get your insurance, then you eventually look at your finance. This started all very much in the years ago when financing and leasing together, package deals were made. But this is now the norm. This is what customers expect, and it should be fast. It should be just one click away. It should be transparent in terms of a fair price. People don't want to get a deal where they overpay. They want it, of course, lean. So they don't want to answer many questions. They want to use. We need to make use of the data that we capture in the process of this vehicle configuration, of this mobility configuration. And at the end of the day, user friendliness in this context means where you have basically a simple configuration of car and package, which ultimately leaves you to a mobility package where basically you don't only get the car, but the whole fuel, so to say, fuel only or charge only at the end of the day. And then we come to ownership, from ownership to usage. And if you consider that in Europe, 92% of the are parked. 92% of the time, cars are parked, are standing in parking slots. 92% of all cars are parked during the day. Then it is a no-brainer to understand that using a car versus owning a car should be much cheaper, because you are much less using a car than you actually if you own it and you could use it. So if you look at the road users these days, then you see that 6.4% on average of the private customers are going for leasing schemes. This will increase. This will double to 12% in the coming years. And if you look at the age group of 18 to 25-year-olds, then this is even tripling. So looking at this usage in terms of in terms of the model and in terms of the underlying leasing that is part of it, the question will be, how do you ensure that from an insurer's perspective? Maybe you don't even know who's driving the car. Come to that in a second. So we are looking at this, and in this respect, we are also talking about things like mobility as a service, of course, where we believe that by 2030, so 2030, 2035, shared mobility and could really generate up to $1 trillion of user spending. And this is a huge opportunity that is completely unexploited yet, and we are confident that this is going to happen. The question will be are the OEMs, so the car manufacturers, are the mobility platform providers going to be able to manage this sustainably in terms of profitably? This is to be seen. And right now we understand from our partners working with the automotive industry that especially the car manufacturers find it very difficult to generate profits in that segment of pure usage. So we're talking car sharing, etc. Now, let me, before going to the two examples abroad, let me just share with you what we've been doing in the past. And Frank Hillen, I've seen also, he knows this picture quite well. This is when we look at as Allianz partners in our automotive team at the world of let's say, mobility or automotive. So basically what you see here is a three-phase approach. So there's a customer looking, informing him or herself about what cars or services are there, mobility is available. Then they purchase or they purchase a service or a car, and they use it. And in the usage, of course, there's accidents, there's maintenance, there's repair, and then you have the after sales. This is what we call the after sales part, and that's where usually car manufacturers earn the money. And when you see the orange fields here, that was in the past what we were really concentrating on. So it was, of course, different segments, be it direct to consumer, be it used cars, be it new cars, financed, leased. But now we see with the blue in the blue boxes that we have new models which are more looking at renting or at sharing. So we are coming basically from 20 years ago, cash moving to finance and leasing, from finance and leasing now moving to renting and sharing. And then you can see, of course, models where direct distribution is taking place, especially for the new entrants, like Chinese car manufacturers, thinking about selling their cars directly to consumers, which will obviously also create a different dynamic in terms of how you make sure those cars are insured, how you package deals around those cars. So it's in all of that, in a model where we see more and more, let's say, fleets being insured. So the asset to be insured rather than private individuals being insured, and that's a big opportunity on the one hand side, but also a risk for insurers, because managing those risks, especially if you look at the traditional renting business, is a very tricky thing. Losing lots of money is not seldomly happening, so you have to be really mastering that field. Now, I've brought two examples with me, and no, I don't want to talk about a cafe or restaurant here. If you take a look at the left-hand side of the picture, you can see a left rear wheel of a car, which is a Lynk & Co. So this is the dealership of today, not of tomorrow. It's the dealership actually of today. It's not a dealership per se. It's more like a store and an experience. And if you talk to Lynk & Co, this is really, really different. They don't put the car into the center of the scene. It's about you become a member, and this is the member lounge you can basically go to, and you see these things being even advertised on Playboy. Yeah? So this is not the traditional. This is the metal. This looks beautiful, and this is how you can get it, and that's the price. So what we've been doing with Lynk & Co is putting in place a month-to-month subscription and a peer-to-peer car sharing model, and we also insure their own fleet in 6 markets in Europe already, where basically we are covering motor MTPL, we cover motor on damage, and also the personal accident risk. And interesting enough, volumes have risen quite tremendously. So we are talking about 20,000 plus cars already, which at the beginning wasn't clear, because we are talking about a full electric car, about a brand nobody knows, about a concept that you have to buy into. So Lynk & Co here is the policy holder, And what the customer can basically do is he can give his own car to one in his community for a fee, and make basically his car earn money for him, which by the way just reduces the subscription fee he's paying himself. So a very innovative model where, from an insurer's perspective, you don't really know who's driving the car. So what we've been experiencing, because of this community idea, that we are seeing tremendously great loss ratios in that specific Link & Co model, which allowed us to really reduce premiums or basically give back money to Link & Co in order to build a relationship here where we then use that money to invest into new product propositions, and there's more to come in the future. So a model that you, as a traditional insurer, would have looked at from the very beginning. It's like, oh, very suspicious. Is that going to work? Are we going to be able to make money out of this? And ultimately, if it wasn't for, let's say, the global agreement we had as Allianz partners, making our local Allianz entities to deliver that, and I'm coming back from the sentence from local to global, then this would have never happened. And now it is in a way that you say the winner takes it all. So you're the first to go there, so this model has been attracting also other manufacturers or other brands who are looking at similar models and talking to us in terms of setting something up for them as well. The second example I want to use is Lime. Now this is Lime in Paris. This is one, this is of course in Paris, Lime scooters. There's a discussion about banning them, etc. I guess this is more political issue. It's not so much a risk topic, but it's more political. Say it again. Sorry. Okay, that wasn't a question. So we are working with Lime, and it was one of our first, what we call micro-mobility partners in 22 countries now, and we have over 1 billion rental minutes insured. Now, we do MTPL, we do rider general liability, we do personal accident, and we do scooters and bikes. Yeah. So first of all, this meant for us, we had to go down from let's say a yearly premium down to a minute-based pricing. We have learned about minutes-based pricing with one of our car sharing providers, DriveNow, where we introduced that also because it was needed. We didn't have that. And guess what? At Allianz, being a big insurer, it wasn't so easy to convince both the actuaries and the operation to make this happen, but it's needed if you want to be in that field, and it helped us to win Lime. And if you have the biggest one, you attract the others, and it's again a winner takes it all approach. So it's from pushing this into the market to pulling the demand and the opportunities out of the market. And we are now proud to be able to say that we have a market share of 65% globally in e-scooter insurance business, which only developed over the last 4 to 5 years. So this is huge. It's of course small premium per scooter, per ride, but if you sum it up, and we are talking more than a billion minutes insured, then you can estimate that this can be an interesting business. And it's especially interesting because you learn a lot about behavior of the clients. Of course, there's a lot of opportunities that you have with the customers that are riding e-scooters, and you can include those, and this is more the automotive perspective, that you can take this partnership and potentially build it together, bundle it with maybe a Link & Co. Membership, where you say, okay, next to your subscription on the Link & Co, you can also, I don't know, drive so many minutes with a Lime scooter for free because you're part of a partnership between Link & Co, Lime, and Allianz. Yeah? So last not least, I said I would want to leave you with a couple of food for thought, key takeaways, take it as you wish, calls for action. If you look at the more direct sales and if you look at those, let's say, connected businesses like the Lime business I just mentioned, then then we are fully sure that embedded insurance, and everybody's talking about embedded insurance or solutions, will become the norm. So you need to understand yourself as a provider of a solution, be it an insurance or a service, of a B partner. Very often we find it very difficult as traditional big banks or insurers to not show our face to the customer, to not have the customer own the customer ourselves, but it's really about embedding yourself as a tool inside the mobility journey of your B partner, be it a Lime, be it a Lynk & Co, a Volkswagen, an ALD, whoever. And it is about providing peace of mind. So this means it's not only, if we understand this as, if you ask Allianz to be your partner, then, you can be sure that we take care of, you can trust us. We will not only deliver a perfect experience, we will also deliver additional products and services. Yeah. And it's really peace of mind, both for you as a B partner, because a lot of those B partners are new companies coming into Europe. For instance, Chinese car manufacturers have not a huge team. They want to have ideally one person to deal with, and for them it needs to be peace of mind. It needs to be taken care of for them and for their end customers at the end of the day. And then, of course, it's even more insuring fleet owners rather than insuring individual motorists. The individual motorist insurance will probably die over the next decades. Nobody knows when, but probably owning a vehicle. Maybe it's about having an exclusive right to drive a vehicle. Yes, but owning a vehicle will die sooner or later. We see this trend since years. It's been slowing down, and then during COVID, people were looking for individual transport, of course. But the trend is clear, and the distribution models will help to speed up this trend. Because if you look at also the way car manufacturers are selling their cars today, yes, via dealers, but those dealers are agents. Yeah, and so they don't sell off the car to an individual customer, but the OEM itself tries to position this directly to the customer. And the model to do this is ideally via a leasing contract, because then they can control the residual value. And if you want to be in that business, and if you want to be embedded into the proposition of a partner, you need to be ready to build global partnerships. This will not be, if you are a local player, you will probably find it hard as a local hero to play a big role for a global partner that is looking for a global peace of mind solution. And of course, a strong brand helps. And I know that some of the partners that are joining, that you have a strong brand and you need to build on that. But it's not only the brand, you also have to have the dedicated team, the team that understands that the market dynamics you are in, that understands the trends and can translate those into opportunities by basically giving the answer to a question that haven't been asked. And I'm sorry to say, but if you haven't started in doing so, you're probably already too late, because there's a lot of competition out there that is amongst them. It's also us that is capturing these opportunities right now, because there is a need to deliver solutions, and those solutions are very often very complex. They are in a very interconnected environment, and they need to be in a very holistic way. And this is like, to navigate this, coming back to the perfect storm, to navigate through this environment requires really dedication, a dedicated team, a clear governance, which is also, it wasn't all on iron and perfect. It is still probably not perfect, but the dynamics are asking us to exactly go into this direction, all of you as well, in order to navigate the storm, which also, at the side of the storm, or at some parts of the storm, there's good winds that will help you to really move fast forward. So it's a perfect storm, and with lots of opportunity, and hopefully you have already started to capture all the opportunities that there are.
Great.
Thank you.
Thanks a lot. Thanks a lot, Stefan, for this. really passionate story. And the 3 words I take away from this: it's massive, it's different, and it's urgent. So I think a good case for action for everyone. So thanks a lot for this. Let's perhaps come to the next speaker, Ronny Seidel, whom I really have the pleasure to introduce, who is the Global Head of Commerce of Mobility Activities of BNP Paribas Personal Finance. So Ronny has a long-standing experience in auto financing on probably all aspects of it. And obviously, one can imagine that he has also been testing a lot of mobility things beyond finance. We also know that BNP Paribas is taking a mobility one bank approach. Perhaps Ronny will tell us a bit about this as well. And obviously, BNP Paribas Personal Finance does not require to be presented anymore, because you have 4.4 million vehicles under financing, 35 billion of outstanding, over 10 countries where you're present. So definitely massive. So Ronny, we are really impatient to know what you want to tell us about ownership to usership.
Thank you, Markus. Hi, everybody. It's a great pleasure to be with you. And I see that I know quite a number of people in person or through LinkedIn already. So it's good to see you. In my presentation, I'm probably going to focus a little bit more on cars and not on all the mobilities, even if I agree with Stefan that the holistic mobility approach is the right one. But I just wanted to share with you what, let's say, what we have done and a couple of maybe of convictions and trends we see. Just to complete what Markus said before. So a lot of things are moving around mobility, especially around automotive in a constrained market. Just think about inflation. Inflation is very high, interest rates are very high, supply chain problems with the manufacturers in the past, which are about to be solved, in a context where demand is decreasing and new competitors arrive in Europe. So Stefan talked about the Chinese OEMs. So it's I don't know if it's a perfect storm for the automotive market, but it's another storm, a new storm, and there have been quite a number over the past years. So from our side, on BNP Paribas side, we try to help manufacturers, distributors, and the end customers, any kind of end customers, from fleets to private individuals, with a mix of solutions depending on their situation. And I think it's important to have in mind that we don't only talk about new car buyers, we don't only talk about electric car buyers, and we don't only talk about people living in cities with easy access to multimodal and public transport. So we want to help any user access the mobility they need, and the context of people is very different, especially in today's context. Used cars, just remember, in Europe, the used car transactions are 3 to 4 times bigger, depending on the markets, than new car transactions. So used cars is an important topic, and as the new car prices have increased by up to 30%, the used car market will be bigger. And even with electric cars, the average emission on the road in Europe will increase over the next years, just because people cannot afford to move to clean mobility right away. So we try to build the products for new and used vehicles on the retail side, any product from loan to full service leasing. Full service leasing for fleet customers. And when we talk about full service leasing, this means also for shorter durations, especially thinking about medium-term rental for temporary solutions needed by corporate fleets. There are solutions in place. Subscription mobility offers, which we have in place and are still testing. We're testing different modalities per market, because the market needs are not the same. So we test them in a B2C approach, but we test them also with manufacturers. And you have probably seen that we have launched the subscription offer for MG in Germany very, very recently. So it's a very interesting product. It's an interesting process, but we would like to understand better what kind of customer segments are interested by subscription, especially around new cars. So it's still, for us, it's still a test and learn, and we have the products on the shelf, obviously perfectly integrated into the buying journeys online in the point of sales for dealers and for manufacturers. And at the end, as the trade cycles are very important for manufacturers selling new cars, managing residual values as best as they can, we need to take care of remarketing and financing the used cars as well. So let's say the move to usage, let's say it's natural. It's natural from a manufacturer perspective, because as CVA said at the beginning, they want to control a bigger part of the value chain of vehicles. So it's the new vehicle, first life cycle, second and third. So residual values and usage products are important, and it's important for the consumers as well. We have done a survey, and I might slightly disagree with the assumptions of CVA, is that for at least for private individuals, options are very important. Private individuals want to have options at the end of the contract, and they are happy to pay slightly more if they have an option to buy the vehicle. It's an uncertain context around technology, electric vehicles, around regulation, what's going to happen with the zero emission zones or low emission zones. So they would like to have the options. And I think from our side, when we talk about usage, I include finance lease, and I include also balloon loans with optional balloons, because they all respond to a usage moment during the financing and different options at the end. If you don't agree, obviously you can react, and we can discuss either in the meeting or afterwards. But it's let's say it's a conviction on our side. And with this mixed offer, we have around 6 million vehicles under financing, 4.4 on personal finance side, and a bit more than 1.6 on our side, completed by the insurance and service offers from iCare and Cardiff, and then our corporate banks and our commercial banks in the different countries. Subscription, we've seen and read a lot of studies, and I just took a couple of elements from very interesting studies. So it could represent 20% of retail financing by 2025. You know, 2025 is tomorrow. It's an 18-month. So I would say we will not be there in 2025. It could be 15% of new car sales by 2030. This means this will be driven by fleet and by private individuals. The figure is so big that it will need to be driven by all segments of car users, and it could represent 22 billion euros of new car financing by 2030 as well. So the figures are huge. That's why everybody is interested in subscription. And it's called the Netflix of cars as well. On this last point again, I'm not discussing the first three elements. I have a doubt on the Netflix of cars, because from my personal perspective, I think there's a difference between spending 15 euros a month and spending 500 euros a month, no matter how much money you earn. So I think the approach to the subscription, and as Netflix, I think in terms of user experience, it is true, but in terms of customer behavior, it will not be the same, because the weight in the household spending for a car is not the same. Today, the car is the second spending in a household, just after living expenses. Okay. From my perspective, what is more important to have a look at is the user needs. Where can subscription play a role, and usage overall is uncertainty. Uncertainty of the economic context. We talked about inflation, we talked about the war in Ukraine, but we can talk also about technologies. EVs are coming, EVs on the market, but what about the technology? What about battery technology? If I'm buying an EV today, is it the right technology? Should I wait a couple of months for a better autonomy of the battery, etc.? So a lot of questions about what is the right choice, which car to buy. New car, used car, and which technology. Some people might hesitate about new technologies. That's what I call the test drive. Not used to EVs. Autonomy is different from a combustion engine car. So I might just try. I might just try the technology and try the car and see if I like it, and I want to switch to the new technology. The need now, especially over the last 2 years with supply chain problems. There were a couple of problems with availabilities, and subscription, just like rental cars, are available immediately. And the final customer need, which we could identify, was the always in, somebody who always wants the latest vehicle, the newest technology. These are the subscription offers which had been launched in the US first, and which are launched now by luxury brands or premium brands in Europe as well, is really making the latest car and the latest technology available for the users. And compared to those needs, what does exist today? For uncertainty, if I'm not sure how long I will need my car, especially for professional buyers, or if I'm unsure about the economic context, you have short-term rental and medium-term rental. Medium-term rental is not a usual product in the private market, but in the fleet market, medium rental is quite existing offering. The test drive, try and buy, I think there's a real opportunity, because there are very little try and buy offers in the market, so subscription can respond to the try and buy. And then obviously there is the need now. For the need now, you have available cars, you have medium rental and used cars, but there again, subscription can play a role, and you have some offers in the market, but which might not exactly correspond to need of the consumer. So what really changes with subscription for us is the easy access. Easy access, this means the car is available, I have a choice of available cars, and I can pick and choose. It's a great customer experience, because usually subscription is not launched based on the existing technology or the existing offers of a company. It's launched a lot by startups on new platforms, and there the customer experience is great. The customer experience is, let's say, it's closer to short-term rental, because some granting processes are rather through credit card authorizations than full granting processes, as if I would use a loan. Flexibility is important. What we have seen in the market is that customers appreciate the flexibility, are happy to pay a little bit more, and at the end of the day, they are using subscription vehicles for quite a long time, and maybe Matthias afterwards can tell us a little bit more about that. And then the last point is, I'm choosing a car or the car. I had the choice to choose a specific car, a model, a brand, a color, technology, or I just pick, like for short-term rental, in a range of cars. So for us, it's a great hook product. It's still test and learn on the manufacturer side, but also in the B2C side. And it is particularly interesting for new entrants and electric vehicles. Key success factors for us is the purchase price. Prices have increased, and the available stocks. If you want to have an attractive pricing on usage, but also on subscription, you need a good purchase price for new and used cars. You need to cover the depreciation curve, which is very steep over the first month of the vehicle. You have to optimize the usage rate and the average time a subscriber holds the vehicle, because like this, you're going to manage the depreciation of the vehicle and the value of the vehicle and the reuse of the vehicle. You have to focus really on customer experience, make it as smooth as possible, as Stefan mentioned before as well. It really is a customer expectation. And if we don't work from legacy, obviously it's much easier. And at the end, acquisition cost of subscription customers are significant, like for any other customers. Focus on retention. First subscription, second subscription, or let's move the subscription customer to, I don't know, full service leasing, a leasing customer, or even a loan customer afterwards, once they are convinced by the technology and by the vehicle, and cross and upsell different mobilities, a bike, an insurance, and additional services. So this was in a couple of minutes our view today in a market which is still evolving quite fast around subscription.
Thanks, Ronnie, for this. Really very interesting and actually quite profound in describing how subscription is actually a new animal. It's not just a short leasing contract, but it actually changes how people purchase. And I think this goes really to the heart of how vehicles are going to be used in the future. So obviously, a lot of also alignment between Ronnie and Stefan. I would perhaps, because of timing reasons, come now to Matthias. And Matthias, do I need to present him? He's obviously the founder of Vive la car subscription expert and pioneer. Now he has founded Vive la Car, asset-light subscription player with 100% digitized processes a long time ago already. And then obviously Matthias also has been doing auto all his life, basically from founding, developing a dealer group, I think in 2004, from 2004 to founding and developing Vive la Car, one of the biggest sagas in European subscription. So really looking forward to what Matthias, you're going to tell us about this phenomenon of subscription.
So thank you very much, Marcus, for inviting me. Thank you, everybody who's joining now this very interesting webinar. And hello to Ronnie, and of course, also hello to Stefan and all the participants. And just let me see that I try to share my screen with you. I just need a second for that to prepare. And I guess it's very important to understand what we are doing. We are one of the startups in the market, Ronnie mentioned before, and we started with car subscription in 2018. And I developed the concept with the eyes of a dealer, first of all. So because I had a problem with more than 13 dealerships in Germany, one of the biggest Peugeot and Citroën dealer in Germany, I have cars on stock. And I know that the value of a car is not stable and a car is losing not value like in a line, it's going in waves. And so sometimes the car is after 1 year, it's the same value than a year before. So this was the starting point for us to think about. So let me see, now it should work. Okay, can you see my screen? Yes. I hope yes. Okay, now it should
Yes,
work,
we do. Go
right?
ahead.
Yeah.
Yes, it's good. We can see it.
Okay, perfect. Thank you very much. So where we are, the customer expectation, like Ronnie mentioned before, we have Netflix, Spotify, really simple access, a lot of digital services. And when you see on the automotive market, it's a huge market, of course, but we have a lot of paperwork, financing, leasing is very complicated to do. And it's regulated as well. So car subscription is not regulated, not in Germany, not in Europe, not in US market, and will be not regulated because the risk for the finance good is on the dealer side and not on the customer side. So this will be a very, very important point for the future as well. And we see that also to bring all the insurance, all the stakeholders together to use a car is really complicated. Of course, car subscription is not really new. It's like a long-term rental product, but as we developed really from scratch a new platform with all the digital possibilities we have right now, we created a new product, at least. All the costs are included, of course, full control. You can cancel it at any time. There is no fixed duration from the beginning. It's very flexible. We have now, we started now with 2 OEMs to have a 4 weeks notice period instead of a 3 months. There is a change now because they are interested to have more and a better customer experience. And we learned that the 4 weeks is more interesting for the consumer on one hand side, but on the other hand side, there's no problem for the dealer. It's 100% digital.
Matthias, sorry,
Yeah, Matthias.
we can't really see your screen well because you are in a presentation, not in the presentation mode. Now it's better. Thank you.
Now it's better?
I had the same.
Okay, I'm very sorry for that. Thank you, Stefan. Okay, now you can see it?
Yes,
Okay.
all good. Thank you.
Okay. Then we have, as an asset-light provider, we have a lot of cars, I mentioned before, immediately available. Passenger cars, but also light commercial vehicles. We have 6 different kilometer packages you can change monthly. So you can adjust the price you pay for the car, like how you use it. So you pay what you use. If you drive more, you pay more. If you drive less, you pay less, and you can adjust it every month. I guess it's really the product is a new customer experience. As I mentioned before, it's 100% digital. It's one-stop shop, so you can do it just with mobile. You can do it from the desktop. It's flexible and all costs included. There's one price. So this is what we really can compare with long-term rental. And on the other hand side, finance, leasing, or cash purchasing is a much more complicated process. It must be easy to subscribe a car, and it is easy. You have the journey, you enter all your personal data, driver license, and all these. We do the credit check with 3 different systems in real time. And then if there's a green light, you get immediately confirmation for the booking. If it's a yellow or red light, then you have to upload some additional documents. The agreement will be done between BlaBlaCar and the consumer on one hand side, and with BlaBlaCar and the dealer on the other hand side. All cars are tracked with a GPS tracker or with the telematic data from the OEM. We've switched now. More and more cars are now equipped with the telematic data from the OEM side, like Mercedes, like BMW, Ford. So we work there directly with the OEM. And then the handover is done by the dealer. Hopefully, in most of the cases, we try that the dealer is doing the handover because of the brand experience, especially in our cooperation with Mercedes-Benz. It's very, very important for them that the consumer will get a really, really great experience with the handover. So it's important that all the systems are explained by an expert, and that the Mercedes-Benz brand experience is coming with the car. So we try to bring the consumer to the dealership. Of course, there's a lag in the market, so there was a gap for car subscription from my point of view. There's sharing, rent, of course, leasing, purchasing, but car subscription is in between 3 to 24 months. Car subscription is very attractive, especially around 12 to 18 months. Car subscription is the best solution from my point of view, because normally if you buy a car, you will buy the car too expensive and you will sell the car for less than you expected, because on the other side, they're always professional dealing the cars. So normally a private consumer will not make money with dealing normal cars. So they lose more money than it's necessary. So with subscription, you have a fixed rate and you are totally safe about the costs, and there is no risk for maintenance and all of this. So all unexpected costs are yes, can you avoid with car subscription. So this is one of the biggest advantages for the consumer as well. We don't own a single car. We have a completely asset-light concept. That means we are like an Airbnb for cars. So the car is owned by bank, leasing company, the dealer, the OEM itself, and we only do all the services coming with the car subscription. So we run the fleet. We do, of course, the insurance together with our partners. We do the tracking of the cars. We do the invoice, at least also the credit check. All this is done by BlaBlaCar as a service for the dealer, for the OEM on one hand side, and for the consumer, the subscriber, on the other hand side. Why is car subscription also interesting for the dealers and the OEMs? So if we look on the value life cycle of a car, 30, 40 years, most of the cars will be paid by cash. So the consumer is coming every 7, 8 years to the dealer again. Then the leasing comes in. So there are 3 years duration normally. Now we see that the value life cycle of a car could be much longer, especially if you look on the EV. The EV market is very interesting for subscription because there is no increasing maintenance risk. So that means you can have a car under subscription, an EV car under subscription over the whole life cycle. And this is what Link & Co. Is trying to do, that they keep the cars in their own books and they only offer them for subscription. And when the car is coming back to the dealer after the first, let's say, lease contract, because we are also specialized on used cars, especially for used cars, young used cars, subscription is very interesting because the dealer is able to make more money with the car instead of selling the car immediately. This is one chart. I guess you have seen it. We call it Valor, and it's an analyze tool we have now implemented in our dealer portal. So the dealer is able to analyze his whole stock. If a car is more interesting to bring it first under subscription and sell it afterwards, or to sell it immediately. So we calculate profit out of the subscription, and we compare it with the loss of value in the next months, and so we can give a forecast to the dealer, and we can recommend this car is interesting for subscription and this car not. So this is just a chart from spring this year, and you can see that different cars, those 3 different cars are making up to 95% more profit if you bring the car first under subscription and sell it afterwards. Of course, there was in 2022, when the used car prices were very stable and going up, this chart is better than now, but now it's also so that the loss of value over the time of period, let's say 12 to 18 months, is normally between 10 and 12 to 15%, 12 to 18 months. And the payout out of the subscription is between 50 and 20%. So you can imagine for most of the cars, the dealer is able to make more money with the Vive la Car Valor principle than selling it immediately. So we are now active in 3 countries, Germany, Austria, and Switzerland, 12 platforms, 3 countries, 800 dealers. We do right now for the OEM, Hyundai, Renault, Mercedes, BMW, and Mini in different countries. But we see there is a change now in the market when the agency model is coming up now, and more dealers try to step in to keep the car longer in their own value cycle. And of course, the OEM think about how they can handle the return of cars after the first time of period when the cars are sold or going into leasing. And if the cars are coming back to the OEM, then it will be interesting what kind of models they have to bring the car under usage or to sell the car. Normally, Mercedes-Benz tries to keep the car over 24 months in their own value cycle. So it will be very interesting what's going on there. And what we see is that the multi-brand platform like the Vive la Car, and we mirror all the cars on the white label platforms, we mirror at the same time on the multi-brand platforms. And more than 90% of the bookings are coming from the multi-brand platform because the consumer is interested to compare different cars, different brands, different types. We have normally more than around 25 brands on the platform. And it's important that the consumer can choose from different cars and different brands. So this was my presentation. Thank you very much. Sorry for the small problems at the beginning. I hope you was able to see the whole presentation. Okay.
Yeah. Thank you so much, Matthias. Fantastic insights. I really appreciate actually that you found the time to join us today for the session. Before we call it day, I think we can use 1 or 2 minutes. Stefan, you had a question directly to Ronnie, right? Before.
I did, but I forgot about it, to be honest. No, I remember. Ronnie, no, you said, for you, if I understand correctly, for BMP, the subscription is more or less an acquisition tool also for customers for your, let's say, prime business, for your core business. Is that correct? So you are saying it's actually a bit of like you could consider it a distribution cost for you. the losses you are
Yeah.
making eventually on the subscription.
Yeah, and for most of our business is done through intermediaries, so through dealers or manufacturers. So a subscription product is like an attractive leasing product online or in the dealership. It's very easy to communicate because you communicate on an all-inclusive installment. And then afterwards, so that attracts the customer, for example, in the dealership, because still over 95% of the business is done in dealerships on new cars, on used cars a little bit less. And then in the dealership, the salesperson can spend time with the consumer or with the customer and discuss what is the actual need and what is the right answer. So it is an attractive hook product to bring people either online or offline in the dealerships and then transform into whatever is the right product for the customer. So I think it's interesting in terms of communication. And as Matthias said, it's not regulated. So it's much easier in terms of regulation than a regulated product, not to forget.
Thank you.
Very well. If there are no other questions here at this stage, we can still actually give a time to anyone who would like to raise a hand or probably ask in between speakers. Feel free to do it right now. If not, in that case, I think I'll shortly hand over as well to back to Emilia if she wants to probably wrap up or mention a couple of the key findings that we have seen during today's session. Emilia, happy that you were able actually to stay. I know that you had a hard stop at 11.
Yes, a hard stop that became a not hard stop, so that's okay. Yeah, no. So thanks very much for all of our speakers. I think very interesting also to see the kind of commonality in the implications, but the slightly different starting angle of all three players. So I think what it shows is that usership in and of itself is a spectrum of different options, but in terms of filling the gaps, I think where all players are looking at the moment is in this in-between space between rental and leasing as kind of more traditional products, and that there are different ways of doing it, different focus in why you do it. But I guess the fact that all three players are focusing on this also shows just how kind of fundamental it is in terms of product development in the kind of mobility space at the moment.
Thank you so much. So I guess for all of the next meeting, we'll make sure that we'll have a bit more time for discussion. Apologies, for slight delay today, but I think the insights that we had were super excellent, and we are going to do our best right now to put key highlights and key findings actually from today's presentation, probably in a short article, an overview to share with all of you. So here you can see just an overview of the upcoming events. So obviously, after a short break in between summer, we'll be already planning the next topics to be handled inside the community, whether it's exploring the transformative effects of distribution, whether it will be the impact of electric vehicles on mobility, or as well, the ensuring the future of mobility from the insurance perspective directly, and the importance of the partnerships, not just between institution outside the financial services industry, but especially inside it, between banks, fintechs, insurance companies, and as well the newcomers, as for example BlaBlaCar. Appreciate very much all the insights today. Please stay tuned with us, because obviously our intention is not just to have an online events, but to connect individuals, especially for the topics of their interest, try to navigate you through the best insights and best practices that are happening. So join the community that we have together, update your preferences on the topics, and be even active by sharing some of your insights. Happy to engage any of you. So that's it from our side for today. The event will be later on available as a recording for all the participants that joined today. We'll get in touch with all the speakers for their consent and confirmation whether the presentation and the insights can be shared, and later on we'll let you know all the details. So that's it from our side on behalf of Qorus CVA. Appreciate all the time that you found today, and see you next time at the next occasions and events. Have a nice day.
Thank you. Goodbye.
Bye.
Thank you. Bye.
Thank you.
Goodbye.